the Great Depression bear market, which happened between 1929 to 1932, the cause of that was the stock market speculation, banking, and collapse. So basically, there was a lot of stock market speculation, and investors were buying stocks on margin. So essentially, they were borrowing a lot of money to invest, and then the stocks were also over evaluated. The prices of the stocks were so over evaluated and overpriced that they caused like an unsustainable bubble. And then there was, of course, a lot of lack of regulation, and just the brokerages and the banks, they were operating without much of an oversight. So about 9,000 banks failed during the Great Depression. And the Fed Reserve also tightened some monetary policies instead of loosening them, so that worsened the crash even further. So the Great Depression crash was 89%. The market was down 89%. That's, I don't even want to think about that. And one thing that really stuck out to me in this overview, I got this overview from ChatGPT, and I wanted ChatGPT to provide me a summary of all of the previous US bear markets so that I can analyze them and review them. So one term that's mentioned here is called protectionism. If you guys are aware of that term, then you would know what exactly is happening right now. So protectionism, if I open that up, in simple words, the definition of protectionism is that government policies that restrict international trade to help domestic industries. Rings a bell? Yes. And I dug a little bit deep into that, and I found out that this was the act, which is called Smoot-Hawley Tariff Act. And that was one of the reasons of the bear market, where it worsened the economic conditions. So what happened was this act was enacted in 1930, and it raised tariffs on over 20,000 imported goods, aiming to protect American industries during the economic depression. But it ultimately worsened the economic crisis by triggering a trade war and leading to a sharp decline in global trade. So this has happened before, guys. In the Great Depression, tariffs were raised on over 20,000 imported goods. It was done to protect American industries, but instead it backfired, and the economic conditions worsened because of that. And what happened? It led to a trade war and a sharp decline in global trade.